Deven, morning. Thank you for joining us. Deven, characterize the market environment for us. Globally, economic data is looking slightly, sketchy, and locally, foreign institutional investors have turned net sellers.
Yes, Nikunj, good morning. Well, yes, you rightly analyzed. I think in the global market after the Easter close in the weekend last week, in the US with the job data coming in, I think Monday the markets reacted. And I think the volatility is, I think, reaching to a higher levels, which is, I think, not a good sign, because that is suggesting that the market globally should remain under pressure. As far as India is concerned, I think we are largely dependent on few things which are going to be the outcome in this week and the next week. One of the possibility of rating review, which is likely to take place with the India's fiscal situation by the international rating agencies, I think that may probably, I think, set the trend for the future. If the rating does go down, then probably in such kind of a situation, we might see the attack coming on to the stock markets, because most of the trading funds would then in that kind of a situation like to offload their portfolios. I'm not too sure whether they have started that process already yesterday. And probably I think next week again the RBI's credit policy review, which is a hope is that the RBI would probably bring down the rate of interest, because in order to kickstart the growth and repair the damaged fiscal situation by way of collecting higher taxes, they will have to bring down the rate of interest. That is the hope. If that does happen, then the market will not go down in hurry. As of now, I believe that I think the Nifty should trade somewhere in the range of 5200 to 5400. Any move above 5400 would be a decisive move as far as I think upside is concerned. But till that point of time, we'll stay range bound.
Deven, hi, morning. What about individual names like IGL and the kind of news flow that we are seeing on the stock, that PNGRB has now directed it to reduce CNG as well as LNG prices in New Delhi as well as NCR, and how badly could it damage the earnings going forward?
Well, I think more than earnings, because I think that would be a matter of calculation that we all can work out. But more than the earnings, the sentiments are not going to be healthy as far as the markets are concerned. Because time and again what we have seen is the kind of intervention of the government in various activities. And that's what is not liked by most of the investors across the globe. And this is what my worry would be, that if we are going to have so much of intervention in each and every subject, then probably I think the things are going to go other way around. I'm not totally sure about, I think, how much it would have the impact on individual companies at this point of time, but I'm sure by the day we'll work out the impact on those respective companies.
So what are you advising your clients, Deven? Is it time to book profits? Because so far in this year, Indian markets are up about 12%, individual stocks are up more than 25 to 30%.
Nikunj, we are particularly not so negative at this point of time. We believe that I think most of the negatives have been factored into. Maybe I think periodical release of data, they would have the play on the sentiments of the people. We believe that I think current levels, if the market gives opportunity at 5200 or below 5200 for some reason or for some time, that would be, I think, a buying opportunity, because we still believe that I think this market is a trading market. It is range bound trading which will continue, and probably for some more months, I guess, I think that we'll have to play this kind of situation. So if we get the market somewhere around 5180, 5200s, then probably at such point of time Nifty long position can be created. That's what we have been telling our customers as well. At the same time, individual stocks, when they react too much into the market and offer the opportunity at lower levels, we certainly like to consider them into the portfolio. Of course, ahead of result season, I think we don't want to spell out too many names, but yes, there would be a listed model portfolio names, I think, which we have selected, I think, which will ultimately gets included in our portfolios of clients.
What do you make of the price action in some of the consumer names? And for individual investors, is it too late now to put their money to work when it comes to some of these consumer names?
Yes, Nikunja, I'm not too sure, I think, whether what kind of growth one wants to take, I think, into the portfolio by getting into consumer names at this point of time, which you are referring to. In my viewpoint is that I think today the economy is offering the opportunity. All the negatives are already seen and factored in. Probably from here onwards the actions would be more towards positives only, and those weaknesses which we have seen in earlier past are likely to get corrected. So my more money would go towards growth vis-a-vis I think protection of capital at this point of time. And for the growth, probably I think to begin with, would like to consider the banking space immediately because of the valuation which is it offers. At the same time, I think the deployment of funds in the economy would lead to higher amount of credit growth. So that would be my first choice. Second choice would be within infrastructure, select few assets and then probably start investing into them, because I think some of the infrastructure asset ownership companies would probably give a better return in the current financial year, and that is where I think we like some of the companies within port sector, and where probably I think the return could be far better. Likewise, I think you could possibly see, I think, some amount of selective upside, maybe in the second half of the financial, in some of the auto companies. So I think in the falling market in the first half, some of the auto companies could become a buy opportunity. So one will have to play very selectively into this market in picking up some quality stocks.
Deven, how do you think this entire Thomas Cook battle is going to, pan out, and what's in it really for shareholders? Because now the latest says that Thomas Cook has pegged a 77% stake at about, 1700 plus crore rupees, and that works out to about 105 rupees per share.
Aisha, generally it has been seen that I think in such kind of battles, I think the minority shareholders benefits. Those who could retain till I think a little longer period of time till the fight is fully over, probably I think the amount of offering that would come out subsequently would probably mean that the better price. We have seen in case of Alfa Laval also the same kind of a situation, wherein ultimately I think the price had been revised and have revised substantially upwards. So from that point of view, if you look at it, I think there is all good possibility that if they want to delist Thomas Cook, then possibly I think the minority shareholder would get the benefit at the end of it. So I would rather say that I think it is a wait and watch game, not to jump into at this point of time. Maybe I think buying is ruled out because of I think rationale not applied at this point of time. But certainly I think one could hold on to if one is holding the shares in the portfolio.
How much of a catalyst do you think could be this year's credit policy?
I think more than the action at this point of time in the beginning of the financial year, it would be the tone of RBI which would matter a lot. Because if they end up suggesting that they want to basically bring down the rate of interest over the next 4 to 6 quarters by 1 to 1.5%, then in such kind of a situation, I think the banking stocks particularly I think would find a lot of favor because of the yield impact I think coming positively onto the bottom line of the companies. So from that point of view, I think this credit policy is going to be important. Secondly, also from the point of view of infrastructure spending, the tone of RBI would be more important, because those projects which are basically wanting to go and get funded, if they see the rates coming down, which they have already started expecting, then in such kind of a situation, I think those projects would have probably light of the day seen at some point of time, and that would mean I think a kick-starting of spending also in the economy, which would ultimately have the benefit coming back to the retail borrowers who are basically I think helping the consumption to grow in the system. So from all point of view, I think that this policy would be I think a critical, it would be I think a crucial kind of a play in this financial year, and we'll all have to wait and see how RBI systematically brings down the rate of interest. One thing is clear, Nikunj, to me, that the rate of interest have picked up. What would be the ability of RBI to bring it down, in what period of time, that would be seen, because a crucial factor of crude oil prices and the subsidy is basically having an overhang at this point of time in their minds. Otherwise, I think things would have been much simpler for them to start acting in reducing the rate of interest.